Hello guys, it's Randall with Bitraged. So we're going to take a look at the market here. This is the weekly market review for the Forex market, and I'm just going to take a look at some pairs that I'm looking at for the week ahead, some things to take note of, and what we want to be watching for. Keep in mind that some of the pairs, specifically some of the Kiwi pairs, are moving more correctively. If you're seeing movement like this, you don't want to get involved in that. Sideways movement, very corrective. You want to wait for it to break up or down impulsively and look for the flags for continuation. So on the DXY here, we're looking at this as impulse, correction, impulse, correction, impulse to fulfill that pattern. We are at a double top area from the higher time frame. This is an important area, and we have pierced that and rejected twice. Now we're trying to move back up. The market right now on the DXY is very bullish. The market on the euro dollar is very bearish. Most of the market is looking for the DXY to continue up. Most of the people are long, or most people are short on euro dollar. The problem with this is most people lose money in the market. Most people are wrong. So when most people are long, they're expecting this to continue up. We know that because of the confluence, we have that arcing nature, we have that double top area here, we have the rejection wicks, and we just know from the higher time frame structure that there's a high probability to see this move to the downside. Now, what's happening right now is you could be looking at this as a possible flag. Even if this develops like this, I will not be taking that, because we have rejection, we've broken the low already, and there's a decent chance we could break this high before dropping. And the reason I say that is because it will catch a whole bunch of people on the market going long, trying to get into a craze, buying the impulse, and then it retraces, cuts their stop losses, and it just pushes the price down. That happens often at higher time frame structures, at double tops for euro dollar and DXY. That's just something to keep in mind as we're looking at this pair, or this the euro dollar pair and the DXY. Would I be interested in buying this? Absolutely not. Was there a sell on this? If you were going to take the short, it would have been this retrace candle, and you would have wanted to get in around a 20 pip. Obviously on the flip side with the euro dollar. If you didn't get that, I would be waiting. There's no reason to take an entry right now. It just doesn't make sense. So, and even if we wait, we can get in on the corrections, because there will be corrections as this moves down. Okay, let's take a look at the euro dollar. Alright, so on the euro dollar, we are on the flip side of the DXY, obviously, and we are in this large descending channel. We do have that third touch. We actually broke through the third touch on the descending channel. We are looking to this to move to the upside. We do have that overall arcing nature, and a large percentage of that is corrective, especially this top portion. So if you look at the hourly here, this is the higher time frame trend line. You'll notice that it would basically pierce right here. We do have the rejection, and it's just kind of sitting on that area. It makes sense to see that happen. Overall arcing nature, as I mentioned before, rejection wicks. If I was going to take this trade, I would have taken it on this retrace, and I didn't take it. But if I had, I would have taken it with no less than a 20 pip stop. To be conservative, you could have done 25 pip. Anything more than 25 would not make sense, because if you break lower than that, most likely you're going to continue. You got about 4% to the top there, and about 6%, 7% there. So that would be a decent trade. Nothing is confirmed here, so it's a little more risky. Had this whole move down been corrective, that would have been a really high probability trade. What I can see happening is two scenarios basically for euro dollar. I can see this kind of making these wicks and then just shooting up. I can see a somewhat of a flag. It's going to look more wicky probably, and then this to drop lower and then quickly retrace. It is possible this drops lower and we form a flag and we continue. that is possible. There's nothing saying it can't happen. It's just not the most probable situation, especially considering we have most of the market is expecting it to continue lower. Most likely that they're going to get flipped and it will move to the upside. I would not be taking a trade right now, like I mentioned before. Either wait to get a flag here, get in for the continuation, or if we do impulse down, wait for a flag there and you can get in on that. I would get in on the break of such a flag there. But the probability scenario for the DXY, for the euro dollar, this is what we're looking at currently. I do expect that a lot of people are going to find themselves on the wrong side of the market soon. So just be patient, wait for the moves, because there will be some moves coming on euro dollar, DXY. Just be patient and let them come to you. All right, so taking a look at EURCAD. EURCAD is interesting. It's similar to euro dollar in that we're in a large descending channel within a descending channel, which is a high probability move to the upside. It is a large channel from December 2018, and we do have that third touch. So you have 1, 2, and a double bottom, which is the same as a third touch. You could also say this as a touch, but I'm going to ignore that. But it would be somewhat valid. It's close enough. Sometimes we don't always get those third touches. So 4 hour. When you see this kind of behavior happening on pairs where you have a descending channel that turns into an ascending corrective channel and then basically turns into a descending corrective channel and it's double bottoming, this is a very good indication that the market is going to turn impulsive and to be ready for it. So basically we've changed directions 3 times now. We had our impulse, correction, correction, correction. And none of this area has been overly impulsive. So it's a really good indication that we are going to see impulsive movement, most likely to the upside. Again, we're at that double bottom area. Most of this is corrective. It is a arcing nature, a double bottom. If I see a morning star formation, I would be getting in on this, possibly on a retrace, but I'd prefer to see a morning star formation to get in on this area here. If we do drop lower here and reject from there, you could also take that entry. If we move down lower impulsively, even if we get a decent retrace, I would not be taking that because it could simply be the start of a flag. And even if it turns out it's not and it continues up, you can wait for those flags. We want to take the higher probability setups. We want to wait for the high probability setups and not just be taking everything, because you're going to take 4 or 5 losses trying to catch the bottom, and then you're going to get what, a 4 or 5% trade. You're going to just pay for your losses. So it's okay to take a loss. You know, if we get a morning star formation here and you get in, well, we'll look at this on the hourly. So on the hourly, so this is actually a trade that I'm still in short. So I'm trying to be open and, you know, not be too biased because I am in a trade short for it. But we are getting that retrace. We are seeing these rejections. What we'd want to see is a very impulsive candle, but I would not be interested in really taking that, I don't think. A nice morning star formation at the bottom would be what I'd want to take. So EURCAD, I am in this trade. It's running. I'm locked in 1.6%. It is running 5%. But I'm leaving a room to breathe because this is very corrective. Okay, so we are expecting that to move to the upside. Even though it broke down, it doesn't invalidate it. Overall, this is still a descending channel, and we didn't quite make that touch, but it's still a descending channel. So to see this break to the upside makes sense. However, that being said, there's nothing to say This can't just trickle down like this. I'm going to stay in the trade right now, and I'm just going to let it come to me. So if it comes to me, takes me out for 1.6, I'm okay with that. But if it continues, I will lock in more. I would not take a flag here simply because of these wicks, but I would not take a flag there because of the wicks. It would have to impulse down and form another correction. I would take that. Or if it impulses up and forms a correction, I would take that. So that's what I was looking at on EURCAD. It's another pair that I'm looking at for the week ahead. Now, Euro British Pound, this is actually a beautiful entry, and I didn't get it. It's the one I missed. And looking at the time, it was 19. I don't know. I missed that. I don't know why I missed it, but I missed that entry, and it was a beautiful entry. It was within my criteria as one I would have taken. It was a really good entry because you could have got in with a 15 pip stop, which would pretty much almost cover this area for a retrace. You have a double top, and then you have that nature and a rejection. And so seeing that is just, there's just so much confluence. Third touch, ascending channel. We still consider this to be mostly a downtrend because we've moved up correctively. And you would be running right around 2% right now, but you would want to be leaving that here. Let's see, right around there, 1.3. So it'd have room to brave in case it's going to continue down lower. But anyone who took that trade, that was a really great trade, and normally that is a trade I would have taken, but I somehow missed it. And I know why I missed the double top arcing, because I was in bed at that time. But this gives you a good example of things you want to look at. When you see corrective movement and then corrective movement up, and it forms that double top area, and then at the very top you get that tight corrective movement, a rejection from that is just really, really amazing. Now, you might ask, how would you know to take this candle? It could continue up. It could. There's a couple reasons why I would have taken that candle. First of all, I'm not going to take the first candle because that doesn't mean anything. The second candle, the next candle is bullish, and the third candle is a rejection candle. So it would have been the full retrace candle. That's not a rejection candle that I would have taken personally. Just my style. And it also adds up to about 6 candles, which is what we look for rejections and tight flags, is between 4 and 6 hours. So that's why I would have taken that reject personally. The other thing I wanted to mention on this quickly before we end is that a lot of people running 0.5% there, they would have seen this bullish candle and they would have quickly taken a break even. This is why a lot of people take really good trades and still end up taking break evens on them, because they're not paying attention and they're getting scared. This is a beautiful entry. You should leave your stop fully open until you can protect it with good management. And basically that is waiting for this to break down. All right, we're going to take a look at a couple more pairs and then we'll close this out. New Zealand CAD. I'm looking at this as a pair for the next week simply because we are running impulsive and we did form that correction that fell out. Now, yeah, but that'd be running 1.3. But it could still retrace, and because of the nature, we did have very corrective nature, and it did fall out. But we're very close to higher time frame outer structure. So while I'm open to this continuing lower, I'm also mindful of the fact that we are probably looking for upward movement on a lot of pairs right now. A lot of pairs are at higher time frame structures. So this could continue down and maybe even break and then reverse. And if it does that, you know, you might get 2, 4, 5% on that. But just understanding that you're near outer structure. The other thing to keep in mind is when you have a flag and then it drops out and then it comes back and reverses and forms a bigger flag, those can play out, but it can also mean exhaustion or indecision in the market, and it could indicate a possible reversal. So this could just come down here, double bottom it and reverse, or it could come down and actually break or test this higher time frame area. As far as this pair, I would look for clear flag if we impulse down, or a rejection on the trend line and a Morningstar formation would be the only kind of reversal I would take. It would be a Morningstar formation. Okay, dollar Swiss is a pair that I don't recommend you trade frequently, but it's a pair I recommend that you keep an eye on because it can give you good entries, but it can also be very corrective and very wicky, and can catch you on the wrong side. For instance, I took this flag, I made some profit on that trade, but it became very corrective, so I got out of it. It moved down correctively, and then it formed this flag. Now, a lot of people would see that as a flag to sell. I'm not going to sell that because where does it come from? It comes mostly from a corrective movement, and it's very wicky. And it breaks the upside. Now, that would catch a lot of people off guard, but it didn't catch me off guard because I'm seeing this as more of a double bottom area than an actual flag to move lower area. Keep in mind, this is the impulse. Small flag, that's just a bigger flag to move higher. This is why people get caught on the wrong side, because they're looking too much of a macro level. So they're zooming in on this and just seeing a bear flag, when in reality, the bigger picture tells the whole story. This is the impulse. That's the hover flag. That's the bigger flag to move higher. So this is stuff that we teach in the course, things to look for, and that pattern is actually something we teach in the course, the hover pattern with the bigger flag. Just something to keep in mind. With the dollar Swiss, we have this very impulsive movement. It's getting a little bit wicky here, so I'd be careful if it does form a flag because it could be a deeper flag. If it moves up and then forms a flag like this, I would take that flag all day long. But I'm watching to see what this happens. If we get rejections and this moves down, I would not be as keen to take that as a flag. Keep in mind we're close to a double top area as well. So just keep those things in mind as you're looking at this pair. But it is very impulsive right now. And if it lines up with the DXY moving, we might see a heavy movement to the downside as well. Okay, so one more pair here is British Pound CAD. If you look at where we're at, it's an obvious descending channel from an impulse. We are expecting this to break to the upside, but it doesn't have to anytime. It can continue just to correct. So I would not necessarily, I would not be interested in that as a double bottom. It's invalid, but I would not be buying in this area or trying to catch the bottom. It's just too risky. So those are kind of some of the pairs I'm looking at for the week ahead. Keep in mind that there is a lot of corrective behavior right now. And even if we see a sudden impulse, it could be just volatility. So never buy the impulses. You want to buy the corrections, buy and sell the corrections. The people who lose buy the impulses. They sell the impulses. But you want to be getting involved in the confirmation of the correction flags, the corrective flags, not just any correction, but the corrective flags. But that's what I'm looking for the week ahead. Those are some pairs that I'll be keeping an eye on. If you just stumbled upon our channel, I encourage you to like and subscribe for more content. If you're new to trading, I encourage you to click the link in the description to sign up for our course. It'll teach you everything you need to know to learn how to trade effectively. It does currently include a Slack group, and we're looking to add more content and create new and improved systems. So encourage you to check that out if that interests you. If you have comments or thoughts on the market ahead, feel free to drop them in the comments below. If you need anything or have any questions, please let me know. As always, thanks so much for watching, guys, and have an amazing day.